Making every preparation to stage an impressive comeback, City Union Bank. City Union Bank, quite reputed for over a century, based out of Tamil Nadu, modest market capitalization, loan book dominated by MSME and gold loans, fundamentally quite strong. In December 2022, RBI came out with its divergence report for FY22 and highlighted divergence in provisioning of gross NPA, net NPA and the related provisioning. It mandated the bank to make appropriate disclosure to all stakeholders. It also flagged certain deviations related to process in respect of year-end sanction of loans. Company's profitability in relation to its net income with stable PAT percentage suffered weakness in its growth both in terms of net income and profit after tax, where the 5-year CAGR was below 10% and the growth rate in the immediate previous year was slightly better. But profit and income growing at a rate less than 10% over a period of 5 years, a great concern. Moving from interest income and meeting the relevant interest expense, the company's net interest income over a period of 5 years registered once again a below 10% growth, with a previous year showing a better growth. Concern was the falling net interest margin, moving from 4.42% to a low of 3.89%, registering a continuous fall for over 5 years, highlighting weakness in its margin. Adding to this was the burden of provisioning, eating up almost a third of net income year after year for over 4 years. The bank, which was under pressure from growth concerns and weakening margin, had to suffer the impact of RBI Divergence Report, which caused multiple downgrades from brokerage houses, bringing down a collapse in its share price. Share price movement in a range of 110 and 200 from 2020, the lower range being 110, a multi-year low. Price has moved with quarterly results very positive and bullish, particularly from May 2022, taking the price to a peak in November, just ahead of the divergence report from RBI, which caused massive collapse in spite of decent quarterly results up until August, reporting figures for Q1 FY24. Optimism is seen in the triangular base at around Rs 120, which is extending its influence right from June 2022. Relevant to note, the triangular base is operational in spite of the share being in a bearish zone ever since 28 February 2023, and the share price moving in the channel has made multiple attempts to cut across 100 EMA, but unfortunately in vain. Bollinger Band is adding to the optimism by suggesting an ascending incline at its lower band, hinting at probability of an upward movement earlier than expected. But the reality at the current level is the share price of 127 is at a Fibonacci retracement level of 8.4% away from 140, the threshold level of 23.6% Fibonacci. City Union Bank has the share price at a multi-year low, carrying a very attractive PE multiple of below 10 and far below its 5-year median, supported by an upward incline in the movement of Bollinger Band. Company source of funds: current and savings account deposits, 5 years CAGR 14.5%, but last 1 year the deposit has not grown at all, very poor growth. But other deposits during the period have registered a CAGR of lower percentage of 8, but annual growth previous year has been quite impressive. As against the total deposits, CASA percentage is registering a fall, coming down to 29.9 from previous year's 32.6. Poor CASA ratio can be hurtful. Advances have grown during the 5 years at the rate of 9.3%, but the lower growth of previous 1 year is hurting the company. As against the deposits, which have grown during the period 5 year by a similar percentage, 9.8 and last 1 year 9.9. The concern is only 84% of the deposits have been deployed in advances. To that extent, there is underperformance in utilizing the funds available with the company. As for the income and profit before tax, year-on-year growth in respect of income has been a bit muted, more particularly during the quarters March 23 and June 23. But a serious concern in respect of PBT percentage falling in a row, and even the absolute amount of profits have fallen from December 22 onwards. In terms of segments, substantial improvement in contribution in treasury, moving from 25% to 35%, quite positive. But City Union Bank is supposed to get major contribution from retail, which has fallen quarter after quarter, and that is a major worry. Failure on CASA ratio, lower advances to deposits, fall in PBT absolute and percentage for over 3 quarters. Treasury making good for shortfall of retail, all putting pressure on weakening its pricing power, and looming large is the threat of deposit repricing, which will further compress its margins, affecting profitability. Company's asset quality represented by net NPA after provisioning from gross NPA. For FY23, gross NPA percentage is 4.37 with a provision covering 47% of NPA, leading to a net NPA of 2.36%. As compared to previous year, quite impressive and healthier, but in comparison with peers, there is a long way to go. In terms of shareholding pattern, company has got a strong holding in DII and FPIs to the extent of 60%, but RBI Divergence Report has been a spoil sport with magnified impact on its share price. Company is going ahead with the digital banking process involving consultants. It is taking up co-lending with NBFCs for housing and vehicle finance, particularly outside Tamil Nadu. H2 FY24, company has got a positive outlook, anticipating credit growth at 12 to 15% for the year as a whole. Century-old banking company of repute. Capital adequacy ratio quite impressive. Proactive initiatives, digital banking and NBFC co-lending. Weakness in CASA percentage and pricing power. Massive impact to market capitalization and reputation from RBI Divergence Report. Hope you found this video on City Union Bank to your liking. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.